Raghuram Rajan, lionized as a central banker in one of the most important emerging markets in the world, India. How much of it was savvy, how much luck? On the next CNBC Conversation. A rock star reception for Raghuram Rajan as he joined the Reserve Bank of India. He was hailed as the troubleshooting James Bond of central bankers at a time when the Indian economy was facing a lot of distress. More than 2 years on, Rajan has had some success. Inflation has almost halved in his time at the RBI, from a record high of more than 11% in November of 2013. The Indian currency, the rupee, at that point had also seen a sharp depreciation, breaking the psychological barrier of 60 to the dollar on the prospect of the Federal Reserve cutting back its bond buying program. Today, India has displaced China as the world's fastest growing large economy, and Prime Minister Narendra Modi is also on a campaign to promote the country as a manufacturing hub. But amidst a backdrop of slowing global growth and the prospect of a rate hike by the Fed, how is Rajan steering monetary policy? Perspective coming up in the next 30 minutes. Governor, welcome to the show.
Thanks for
Let's get right into it and start talking about interest rates. You've surprised a lot of people this year. It's the last one, 50, huge cut, a shocker, down to 675. Without giving too much away, if you could tell us how much more room do you feel you have, and this is a very personal role as governor of the RBI, to lower rates further? Quantum-wise, 675, you see, it seems like you would have a lot more room. Inflation, you brought it all the way down to 3.7. That seems to be able to give you a lot of room as well.
Well, whenever we do this, given the state of the world economy and given the state of the domestic economy, we calibrate rates to what our medium-term inflation objective is. So we do everything we can given that objective. Okay. So I would say that we did everything we could given our objective when we last moved. Now, looking forward, we have to see if more room builds up or the reverse. And so we are currently, watching the data, as are all central banks.
Okay, so here's the thing, if it's down to the inflation numbers, right? Near term 6, you're at 3.7, so you've got lots of room. Even medium term 4, you're under that 3.7. It seems like you would have room.
Well, the 3.7 is based on significant base effects also, which we know are mechanical and would reverse as we go along. Okay. So my sense is the underlying inflation is between 5 and 5.5 right now. That's sort of the run rate. Okay. So we probably will get back to that by the end of the year. Okay. And so that doesn't give us a whole lot of room below the 6. Okay. Our sense is over the course of the next year, because of disinflationary forces, because of the weak state of the global economy, it will come back to close to 5, which is where we are targeting for March of 2017.
What does this also assume in terms of the commodity cycle? Because, I got to be frank, a lot of people I've talked to, when I've said, hey, I'm going to be sitting down talking to Raghuram Rajan, they go, man, this guy is the luckiest central banker in the world. Because on your watch, you've had this collapse in commodity prices, which it was a free pass.
It is a free pass, but remember that what commodity prices do is affect the price of manufactured goods. Of course, food inflation has also been kept somewhat under check by agricultural commodities, which have held up. But where we're seeing some traction now is in services inflation, which was the source of the high inflation earlier. Okay. But as they say, we take all the luck we get, but obviously there is some policy involved also.
Corporate India has a debt problem, right? India's banking sector, dominated by state institutions, has a bit of an asset quality problem as well. As governor of the RBI, you have an unusual role, or rather the institution does, as banking regulator as well. You've done the new licenses, et cetera, and you're putting the banks under review right now. What can you tell us about the situation? How bad are things on a debt level?
As we took up the process of cleaning up bank balance sheets, our first task was to give the banks sufficient powers We don't have a great bankruptcy code. The government is coming up with a new one, which hopefully it will introduce in the next session of Parliament. That will help tremendously. But in the meantime, we've had to sort of put together a resolution process, sort of put it together almost with sticking tape. That we have now underway. And that gives the banks powers to actually resolve a bad debt situation in a way that puts the asset back on track. You know, people take hits, but at least things are back on track.
Okay.
Of course, now what we need to do is make banks actually do what they can do, which is recognize the problem. In case it's a genuine NPA, declare it an NPA and move forward with the resolution process. It's that asset recognition problem that we're putting more pressure on the banks to do now so that they can really clean up their balance sheets.
Okay.
That process is underway.
Okay, corporate India, though, many business houses and also many tycoons have become more nervous on your watch, let's say, because you've been leaning on them as well as the banks, the state banks, to look. What's been happening for decades, you can't, right? You got a bad loan problem, you can't say, look, I'm one of your best customers, go easy on me.
Right.
That's got to change. Can that change with legislation, with law, or does it need something else?
No, well, the first thing is to change the climate. And essentially what I'm saying is equity is equity, debt is debt. Okay. And don't confuse the two. Right. It's not that equity is equity in good times, but becomes super senior bad times, and it's the poor old state banks which take the hit in bad times. So the state banks can't have a one-way bet against them.
Okay.
They're debt in good times, so they get paid little, and in bad times they become equity and recapitalize the firm.
It can't always be win-win for them, is what you're saying.
It can't be win-win for the entrepreneurs and lose-lose for the banks. Yeah. It has to change. Okay. And we want to bring pure capitalism back, which is a contract is a contract. Okay. That's what we're in the process of doing, okay, by giving the banks a few more powers and asking them to enforce their contracts. Okay. Now, I think some will get resolved by a proper bankruptcy code, because part of the problem is when you don't fear resolution. It's the old story, right? If you owe the bank $100, well, they have the squeeze on you. But if you owe them $10 million, you have the squeeze on them.
Yes.
That's exactly the situation, because without a bankruptcy code, what happens is, you know, you basically tell the banks, I'm your problem now.
Yeah.
And tell me, what hit are you going to take?
Okay.
So we're changing that.
Right.
The bankruptcy code will complete that process. And I think we will have a much stronger system, because equity will be equity, debt will be debt, and there won't be any confusion between the two.
Okay, talk to me about this whole idea of gold monetization. It is very timely because of the issuance of these new gold bonds. The last time that India tried this, I think it was 10, 15 years ago, right? Didn't really go so well, right? The government was not able to offer interest rates high enough to entice people to get into this program. Is there a higher chance of this whole gold monetization program succeeding this time?
A lot of thought has gone into it from the government side, and the government is also taking some risks of the banks and of the buyer of these bonds. So it does look like a much more enticing proposition. You see, in India, a lot of people think of gold as a very important investment, partly because they have gold outflow needs down the line. I mean, the tradition, it used to be for your daughter's marriage.
Yes.
But of course, you know, there are other uses, you know, keeping the spouses happy, for example. But the point is, people like to invest in gold, they trust it.
Yeah.
My hope is, as we conquer inflation, trust will move more towards financial assets. But we have to deal with that side of households also. You're essentially buying gold in advance and getting an interest rate to boot. That looks like an attractive product, especially for those who are saving for their daughter's wedding or their son's marriage or whatever.
Okay.
So that, I think, will be attractive. Let us see how that works. We've tried to reduce, the government has tried very hard to reduce the frictional costs of doing that. I think we'll have to see how it works.
So the consequences, if it is successful, it would bring down the current account deficit. We know that. But if you think this program is going to be successful this time around, how much of that gold is the government going to be able, realistically, do you think, to bring into the real economy, or the national economy?
It needs only a small quantity. In actual fact, today our current account deficit is well under control. The issue is what happens when commodity prices go back seriously up, because we're a big commodity importer. So this is, in a sense, precautionary for those times when it will, if we make this program successful, then we will have to buy less gold.
Okay.
And as a result, import less from that perspective. But today, the current account deficit running at 1.2, 1.3%, not a big deal.
We're going to take a quick break here on the CNBC Conversation. We'll be right back with our guest, Raghuram Rajan, the governor of the RBI. Welcome back. This is the CNBC Conversation. Our guest is Raghuram Rajan, the governor of the Reserve Bank of India. Governor, if we could talk about your comments. You make a lot of headlines. You're great for a story and for a quote, right?
No,
because
that's
you're
too
willing,
bad.
you're sort of fearless. You're
boring central banker.
Not
That's
at
what I
all.
am to be.
Not at all. You seem to be fearless and not afraid of taking on big, at least Western institutions, IMF, even the Fed, and we'll get to Prime Minister Modi's policies in just a minute. But for a long time now, the favorite refrain when people think about Raghuram Rajan is QE, not too much of that stuff, right? Coordination, not enough of that stuff. Are you still holding those views?
Well, I think, let me start with QE. I think QE 1 was very needed.
Okay.
It repaired the markets. Very important, very useful. And I think it stabilized US mortgage markets, sent a strong signal. That was good. Beyond that, I think it's very hard outside of, it's very hard to find evidence that it helped what everybody's looking for, increase investment. It increased financial asset prices, did a whole lot of other things, including perhaps some downward pressure in the initial stage on exchange rates, on the dollar. But really, it's hard to argue, unless you're a real believer, that there's very strong evidence this was instrumental in the recovery.
So we've gotten to the point where it's either diminishing returns if you continue down this QE path, or look, guys, all right, we had enough of this. It's just not working. End demand is just not there. Growth is not there.
I think we really don't know which of these two, but I would subscribe to a little bit of both.
Okay.
That there's probably diminishing returns, and even after the first one, it's not clear that the returns were so great anyway. Okay. I think we're locked into this partly because it's sort of Pavlovian response of the markets. Anytime anything goes bad, we look for more QE. And unless we get it, we sink further in the markets, and then you get the QE, and then all is well for a little while until
which is kind of warped. It's a little bit warped, is it? It's at the very least over dependence on central banks.
It is. It is, and that's really my bigger worry, that we are dependent on central banks to solve what might really be bigger structural problems. Okay. We thought initially it was stimulus, and we tried the fiscal bit, ran into political constraints. Yeah. Then we said, okay, monetary policy only game in town because structural reforms are too hard. And so we went and relied on monetary policy, and the central bankers, given that they have this responsibility to stick to inflation targets, can never say we're out of ammunition. Okay. So again and again they say, well, we have more.
So here's the thing, though. You're a big supply side guy. I know that, right? So the fiscal side hampered by basically debt. Supply side, big structural reforms. Isn't that going to be all the harder in a world where A, no one is quite sure where the demand is, and B, that is slowing down?
Yes, but if you think about a situation where part of the problem with people's perceptions is about what is sustainable. Okay. They're looking forward and they're saying this stimulus is going to go away. Your QE is going to boost asset prices for some time, but what happens at the end? Rational expectations would say the asset prices would fall to earth at that point. And I'm not going to die before that. I'm still going to be holding those bonds. Okay. So when I extrapolate forward, all these wealth effects due to distortionary asset prices and so on are not going to stay. So looking forward, the only thing that is going to stay is sustainable growth, not stimulus, right? Stimulus is a bridge, occasionally useful, but if what is the underlying problem is sustainable growth, then I'd better start working on that. Now, we've spent 7 years since the crisis, and we've tried various kinds of stimulus. Where is the attempt to push underlying sustainable growth in a steady way? And I think we need more emphasis on that and less on the central bankers saying, look, I'm up for another round.
Okay, and structural is strictly a government job. What about the corporate side, companies and the capex cycle?
It's both. It's both. But I think the capex cycle will not resume until companies see that there's a pathway to stronger growth up down there, which doesn't involve, yet again, a buildup of huge amounts of debt, either at the household level or the government level. Okay. So those would say, look, we can continue for a certain while, but at some point it's going to stop again. So I would say that what we need is to figure out how to get that sustainable growth.
Okay. We're going to take a quick break. We'll be right back on the CNBC Conversation with our guest, Raghuram Rajan, the governor of the RBI. Governor, if we can start talking about your space right now and where we are right now, which is India. In the press, at least, there seems to be, if not a rift, at least some disagreement between yourself and the Modi government and the Finance Minister Arun Jaitley over the grand plan to keep growth at 6 to 8 or even higher to, I guess, maximize its growth potential over this Make in India campaign. The Jaitley or Modi side seems to think, look, this is for export, this is the China model. You think it should be more make for India, for domestic consumption. Is it that black and white?
No, I don't think there are stark differences at all. I really think we're broadly on the same page. My point really was to say that in the short run, the world is not doing well. We've seen grimmer and grimmer forecasts from the IMF. So a focus on exports at this point may not have much success. We should try it nevertheless, but may not have much success when the world is doing so poorly. So while it's in the ICU, why don't we focus on sustainable domestic demand that is improving domestic sources of growth? And I think the government is precisely on that page. Okay. Longer run, of course, the discipline imposed by trying to export, the competitiveness that is generated, the productivity growth, etc., would be very welcome.
Okay, which kind of leads nicely into my next question, and it's a cheeky one, I know, but I'm obliged to try, right? Export competitiveness, in part at least, maybe even large part, depends on a currency, a national currency, yes. Right? The Indian rupee right now, are you comfortable with where it is, the levels right now?
I'm always comfortable with the level. But, this is, seriously, whether we can rely on an undervalued rupee to do the same kinds of things that our, Asian cousins are alleged to have done, I think it's more complicated than that. Okay. The government is focusing on creating a better business environment. To my mind, that's really where we need to start. Better business environment, which means infrastructure, which means business regulation, which means finance, which is our responsibility, and perhaps most important of all, human capital. And this is where I think we need to make much more progress than some of the other Asian countries. We're sort of in a similar situation to Korea when it started out. And we need to really focus on strengthening the quality of our schooling, of our vocational training, and our universities, some of which are tremendous, are really good.
So let me ask you this. I mean, more spending is being driven towards this end, right? And policy hopefully is being more sharply focused towards this end as well, education as well as a training. But I mean, the challenge is immense, is it not? 500 million people is a workforce that would be the envy of anybody in the world. Yes. 90%, more than 90% are informal. They're off the grid. No contracts, no pensions, no health care. 5% only are actually skilled or have any kind of training. It's a really tough job.
No, let's not minimize the size of the problem. It's a big task. But we have the capacity to do it. We have really good schools. Today they're increasing their intake of PhD students because they know that from teaching undergrads, they have to move to teaching the teachers because they have to become the force multiplier that sends the teachers into the other schools and improves them. So we can do it, but we really need a huge amount of effort there.
Okay. All right. And a personal question related to what we've been talking about. I mean, your career, its trajectory, I mean, everything has been quite storied, I think would be fair, right? Back when you were at IMM Ahmedabad, right, you told students there not that long ago that what you're doing today, governor of the RBI, was actually one of your dreams, right? I want to ask you though, did you actually think you would be sitting in the chair you are now, back then, when it was a dream?
You know, I don't know. These are.
I mean, I wanted to be an astronaut, right?
No, but you know, I wanted to be a fighter pilot before that.
Ah, okay.
But these are serendipitous things. You know, it depends so much on a whole set of circumstances. When you play it back and you say, "What got me here?" and you say, "Is it thinkable that somebody could sort of plot that?" No way. Okay. So it's sort of a happenstance, this, that. Obviously, there's some sense that I always had the sense I wanted to get back to India at some point and participate in the policy-making process. Yeah. I mean, over time, you know, this thing became obvious that this was where I would be. Okay. But it wasn't something that was planned up front and so on. I mean, there are many days here when I walk out and I say, I really did something today. Oh. Just by asking, why are we doing this? You know, do we really need to do it this way? As you have those conversations, you understand there are ways forward which can make things look a little better. So that's fun.
When I look at your particular job as governor of the RBI, though, it bears a lot more responsibility than I think for any other central bank head, simply because the decision at the end of the day is yours and yours solely. But, and here's the but, India is moving towards an MPC, consensual committee style, like the MPC in the UK. Is this a good thing, a better thing? Because what you've done so far in your 2 years at the helm is extraordinary, maybe partly because you've had such autonomy, but also so much more responsibility on your shoulders.
No, look, I think it's a good thing. I think we should not be so reliant on a person. No. A person could be wrong, and there are plenty of people here who think I'm wrong. So I think it's fair, it's legitimate to have a committee representing multiple viewpoints. So it will also bring more independence, because after all, one guy can always be pressured. Last and perhaps equally important is continuity. People can roll off the committee, but the committee proceeds with a tradition and an achievement which continues. So therefore, I think a committee is the right way to go. I'm glad we're pretty much close to agreement with the government, and it will announce that committee in due course.
Okay, it'll be a new chapter, I think, in RBI history.
Absolutely.
Probably one of the biggest changes in 80 years.
Absolutely. You know, the original RBI Act was in the 1930s, when they said, we're not going to say anything about monetary policy because of troubled times now, which was the Depression. And it's amazing that since then, we actually don't have a guide to monetary policy in the Act.
So, 3-year term, if Arun Jaitley came to you and said, look, please stay on another term, would you?
I've been told never answer hypothetical questions. Look, I have 10 months more in this term, lots of work to do. I'm just focused right now on getting that done.
And that's it for this edition of the CNBC Conversation with our guest, Raghuram Rajan, the Governor of the Reserve Bank of India. Thank you so much for watching. I'm Martin Sung.